StandardAero can trace its roots back over 100 years, to where it is now a major provider of aerospace engine aftermarket services for fixed and rotary wing aircraft in commercial, military, and business aviation markets. Conducting scheduled and unscheduled engine maintenance, repair and overhaul, component repair, on-wing and field service support, asset management, and engineering services. The varied customer base and engine platform portfolio have contributed to their resilient longevity, with the majority of revenue coming from long-term contractual agreements. Another factor sustaining the company's health has to do with how it maintains strong relationships with an extensive range of original equipment manufacturers, OEMs, like GE Aerospace, CFM International, Pratt & Whitney, Rolls-Royce, Honeywell, and Safran, as well as carriers like American Airlines and Southwest Airlines. StandardAero holds licenses and authorizations from OEMs for over 40 key engine platforms, providing critical maintenance and overhaul work. These licenses grant preferred access to OEM parts and technical information, warranty support, and the ability to use the names of OEMs in marketing efforts, something that has undoubtedly helped build long-term relationships with approximately 5,000 global clients. Quite impressive, considering its beginnings as Standard Machine Works, which was founded in Winnipeg, Canada in 1911 to repair, overhaul, and rebuild car, truck, and tractor engines. As civil aviation grew in the mid-1920s, they expanded their services to include aircraft engine maintenance, forming an aero engine division. By the 1930s, they were an authorized service station for several engine manufacturers. In 1949, the company incorporated as StandardAero Engine Limited, SAE, and began overhauling turbine engines in 1960. Over the next few decades, SAE grew through acquisitions and expansions, becoming one of the leading independent MRO providers. Today, StandardAero employs almost 7,500 professionals across 49 facilities worldwide. Over the last decade, the company continued a history of capturing and executing new platform opportunities, since they have successfully cultivated or acquired access to 8 unique engine programs since 2016, developing around 2,500 new component repairs. Their approach to mergers and acquisitions, coupled with their ability to complete necessary industrialization for new platforms efficiently, has allowed them to maintain strong relationships with major OEMs and continually evaluate their pipeline for attractive opportunities. Conversely, losing an OEM authorization or license could negatively affect the company's ability to service specific engine platforms and impact their competitive advantage in the market, extending to potential consequences for marketing opportunities. Furthermore, dependence of long-term business prospects that rely on maintaining a stable installed base across engine platforms and adapting to new fleet types or aircraft generations reiterates the importance of OEM authorization. The aerospace industry's growth has led to a robust aftermarket, with engine aftermarket services comprising around 45% of the commercial sector. These services include routine inspections, scheduled and unscheduled maintenance, repairs, overhauls, and other activities necessary to keep engines in optimal condition according to regulatory guidelines. Engine aftermarket providers consist of engine OEMs, independent service suppliers like StandardAero, and airline captive maintenance divisions. Engines typically have a 30 to 40 plus year lifespan with multiple major maintenance events, providing recurring revenue streams for aftermarket companies. Engine component repair services form a critical segment within the aerospace engine aftermarket industry. During engine overhaul processes, parts are inspected, replaced, or repaired as needed. The demand for these services is expected to grow in line with the broader engine aftermarket over time. Part repairs often lead to reduced costs and turnaround times compared to new replacement parts, creating value pricing opportunities and driving market growth. StandardAero and other independent service providers contribute to this growth by offering sophisticated repair services authorized by OEMs. With air travel demand expected to continue growing and the average age of commercial fleets increasing, the number of aircraft maintenance services required is projected to rise over the next decade. Additionally, the upcoming wave of shop visits for engines delivered in the 2010s will contribute to further growth in this market. On top of that, ongoing geopolitical tensions and the COVID-19 pandemic are driving increased defense spending and demand for military aviation aftermarket services globally, with the U.S. accounting for around 40% of total military spend. Sustainment remains a priority for ensuring mission readiness as aircraft fleets age, necessitating higher maintenance levels and upgrades to extend their lifespan. In business aviation, the pandemic accelerated a shift towards private flights due to health concerns and limited commercial options. This increased demand has led to a surge in charter and fractional aircraft ownership, driving up business jet engine maintenance service needs while production backlogs grow at OEMs. On the other hand, supply chain delays have recently affected the availability of parts and engine throughput across all end markets, resulting in significant production and delivery delays. Decreases in budget, spending, or outsourcing by military end users can also impact the company's performance. Moreover, increased costs of labor, equipment, raw materials, freight, and utilities due to inflation pose a challenge. That's why decades of investment in infrastructure, tooling, skilled personnel, and proprietary technology are vital more than ever, enabling the company to keep a scaled global footprint that's differentiated from competitors like airline in-house divisions and engine OEMs who only partially focus on aftermarket services. StandardAero aims to maintain its position as a leading independent engine aftermarket services provider by focusing on several growth strategies. These include investing and expanding their capacity, particularly for high-growth platforms like CFM56-7B and LEAP-1A, 1B. They plan to double their shop visit capacity for the CFM56 through a new center of excellence while positioning themselves as leaders in the growing LEAP market. Another strategy is leveraging their component repair capabilities to enhance their engine services by reducing costs, improving turnaround times, and increasing third-party repair sales. Additionally, they intend to capitalize on market tailwinds and capture share on high-growth platforms through strategic investments. Leveraging their reputation as a trusted partner in the engine aftermarket industry will also be at work in helping secure new engine programs and expand their customer base. Along with the 8 engine programs licenses they've been awarded since 2016, they aim to continue growing the number of platforms they service in order to keep diversifying revenue sources. Similarly, efforts will go towards building upon the 11 complementary acquisitions since 2017. These acquisitions have helped expand capabilities, intellectual property, and geographic reach. StandardAero believes there are attractive M&A opportunities in fragmented markets, and their market presence makes them an appealing joint venture partner, especially in emerging markets needing capital and expertise to tap into growth potential. Now, although the company's business model is highly diversified across segments of the aerospace engine aftermarket, something to be cautious of is that a significant portion of StandardAero's revenue is derived from a limited number of customers. The top 4 original OEM customers contributed around 41% and 43% of their revenue in the first half of 2024 and 2023, respectively. It goes without saying significant issues could arise if these customers terminate contracts without penalty or negotiate for reduced pricing. In other words, there is plenty of diversity in terms of the number of platforms and components that can be serviced, yet there is high concentration of revenue coming from a relatively low number of customers that make up a considerable chunk of revenue. Moreover, a macroeconomic downturn or industry consolidation might increase market share concentration, resulting in more bargaining power for a limited number of customers. StandardAero is also at risk if OEMs modify pricing, reduce service volume, provide direct aftermarket services, or engage other providers, which could lead to decreased revenue and potential liabilities. Not to mention, a considerable portion of StandardAero's costs of sales consists of new OEM materials that are included in the engines they service and are often passed through to end customers with minimal or no markup, impacting their reported margins. On a similar note, the company does not have guaranteed future sales due to its lack of volume commitments with customers. Long-term contracts are present, but most do not include volume commitments, leaving room for uncertainty regarding future sales. Customers may terminate contracts on short notice, and there is no commitment to purchase a minimum quantity of products. Prices under fixed-price contracts are predetermined, making the company vulnerable to costs or lead time surpassing estimates. The possibility of costs varying substantially from original estimates due to factors like engine condition and inability to recover, increases in raw material prices, taxes, or labor costs further complicates matters. Furthermore, for certain fixed-price arrangements based on engine utilization, payment timing may not align with cost incurrence, potentially impacting cash flow and liquidity negatively. When it comes to international operations outside North America, compliance considerations can complicate matters with multiple laws, exchange controls, political risks, economic instability, and tax consequences that need to be accounted for. Some examples are anti-corruption laws like the FCPA and similar worldwide anti-bribery laws. Elsewhere, the ongoing conflicts between Israel and Hamas and Russia and Ukraine pose uncertainties, all of which have the potential to significantly harm sales to international customers if conditions around regulations and/or logistics evolve to restrict the geographic reach of StandardAero's operations. On October 2, 2024, StandardAero began trading on the NYSE under the ticker symbol SARO, initially setting its public offering to target a valuation of up to $7.69 billion, with plans to sell 60 million shares priced between $20 and $23 each. After its first week of trading, the objective of raising up to $1.38 billion was largely reached. Carlyle and Singapore's GIC were among pre-IPO investors. StandardAero is now owned by Carlyle, a global investment firm, which completed its acquisition of StandardAero from Veritas Capital before the IPO. Up to $155.3 million of the proceeds will go to Carlyle and GIC, as they offloaded some stake, but will remain the majority shareholder after the IPO. For more on StandardAero and other companies, follow Ascencore. Thanks for watching and have a nice day. See you again very soon.